Bitcoin is holding for dear life. If you've been a long-time subscriber of mine, you know I nailed this Elliot wave to the penny and been making a killing with you guys. The question are, did we finish the relief rally I spoke about in June 4 months ago to 24 or 29k, or do we still have some upside before we see a big decline? We're also going to look at the DXY, the S&P 500, and the short-term Bitcoin price action. If you want to learn to trade, guys, you're welcome to join my new class. I have started this class yet again, and people are joining, becoming profitable. You don't have to join. You can join a free Discord server and ask my students how they feel about the online course. There's no BS, no hype. It's proper trading. These are live tradings where we go talk about different theory, strategy, and so on. And there's a brand new people who never ever traded before for becoming traders. You guys are welcome to join the free Discord server, and if you like it, you guys can join the Patroen, and then we will find time and I will be your mentor. We have a large motive, which is an impulsive wave to the downside, and yes, they are a real thing. An Elliot wave is not only impulsive wave to the upside, it's also to the downside, and these movements to the upside we call corrective waves. And we had a wave 1, 2, corrective wave, impulsive wave, and a corrective wave to wave 4. The question are we finished with wave 4? And if we look at this weekly chart, we can clearly see that we went to the 24k, actually above 24k, I believe the 25k, and then we got rejected and held the support, which was this previous resistance, and we still hold it. However, it is looking very bearish. Now the probability is getting lower for 29k. For that to happen, we need a huge amount of volume. We need a lot of people, a lot of liquidity. And if we look at Google Trends right now, the interest is falling highly, all right? So that means the new liquidity, which is getting into Bitcoin, crypto stocks, whatever it is not from retail, all right? They are from the market makers or institution who is manipulating the price most likely. This volume is not from retail. And if we lack volume and we lack money, the market makers cannot, we call them liquidity hunt, they cannot grab the liquidity. So the price action will slowly go down. So the probability for 29k, which was a big bear rally, have decreased. So in our TA, we can say that we might have done wave 4. It did not go to the golden pocket area, which was a big resistance, but it did went to 25k. As we anticipated it will, because it did break this resistance, made it validated. Now, of course, it still have a probability to go to 29k to lure all the people in because of the mid-election thing that's happening in the US, and they will most likely be pro-crypto and so on. So it can have a short-term pump. Now, I do believe that the market before that, will have a leg down. The reason is we lack interest, we lack money, we lack liquidity unless the institution try to manipulate the price. As you guys are seeing, this is raw data from Google itself. People are losing interest, and we know if people are losing interest, there's not what we call this money inflow. There's not enough money to push the price up, and if the supply is greater than demand, we usually see a decline in the price, and that is what's going on right now. So most likely, I do believe that wave 4 is done and we are moving to a wave 5. Now, of course, this is based on the weekly, so this takes weeks to happen. So do not get this wrong. There will be high swings and, something like that, all right? These swings most likely will get a lot of people, getting FOMO and so on, bulls are back and so on. And when price is going like this, the bears will get back and say, oh, we have doom. This is a doomsday, we'll never get back up and so on. All right, don't fall for this, guys. Stay objective, see the charts as they are, see the data as they are, and just follow the trend. And the trend right now, the big trend, is bearish. All right, now to break this bearish trend, this long bearish trend in the weekly, we have to go at least to above 36k, something like that, and hold it. Then we have broken the bearish structure. And of course, this is a big movement to the upside, all right? But then we know for a fact we have broken the bearish structure. It's not a guarantee that we hold but it's a higher probability that we have broken this big bearish structure. And in the daily chart, in the short term, we can clearly see that we have a ascending channel over here, and we broke that down because there's a high probability with this ascending channel is a very bearish formation. We did break down and retest as I anticipated. If you're a long-time subscriber of mine or follow me on Twitter, do that, guys. Then I was very keen that we might even, if after we broke down, we retest this area. Now we can, of course, retest the second time. The probability is not that high, and we can retest the supply zone again. Probability is not that high, but we can do that. Now bear in mind, like I just said before, in the long term, that the interest is not there. So if the market is moving to 24K, 23K, these movements are not from retail, all right? They are from market makers who want to have this liquidity hunt, all right? So don't be a exit liquidity for them. They want to grab your money right away, and then it will push the price down. This is usually what happened. Of course, the probability is not that high because the chart are very bearish. Now we can look at the volume. Volume is lacking right now. It's not a high volume. And if you look at the RSI, we are below 50. If you are a student of mine or a long-time subscriber, you know below 50, we are in a downtrend and we are just kissing 50, getting rejected. High probability the price action will go down. Look at the RSI stock. We're getting overbought. They're perfectly aligned. So we might push a 21K or 20 or 20.9 or 20.6K around that area price range. I believe we will get rejected. Once we get rejected, guys, yeah, we will move to around 18.4K. If we break that 80.4K, we will move down all the way to 16K where we hold support, or most likely try to have a retest of the 17.4K or 17.7K before we might get decline again, or we can even push the price up to around 90 to 20K just to get people bullish again. All right, what could else happen is if actually we break this, because a descending channel is actually bullish channel, but because of the macroeconomic aspect of it, I don't believe it will break it. But let's just say for argument's sake, because is it a possibility it break, it will most likely retest around 20K and then move up to 24K on this area before it get rejected, because there's so much supply at this area and there's so little demand. Price will most likely decline. This is a low probability, but it can happen. Be aware of it, guys, and do not fall for these. Or the price can get declined right over here and we can go back to doomsday. The S&P 500 have reached my target. I have been talking about this for years, and this last target I have was on my previous TA video. Kudos to you guys who have been following me and long-time subscribers. You know that we were anticipating this movement, and lo and behold, it actually hit my target and went below. Now I'm still very bearish on the S&P 500 because of the macro aspect of it, but my support line is 339 and worst case scenario is 293. A fast notice, guys, remember this is based on the daily, and remember nothing goes down on a straight line. It will bounce back before it goes down again. So I do believe we will have some kind of relief ready right where we are, unless we go under this line and retest this. Then yeah, there's not much relief really left to it, to be honest. But just be aware, we might it's Friday tomorrow, we might see some pump Friday tomorrow. Usually on Friday there's some pump for the S&P 500, and then people will say, all right, it was the bottom, we will not go lower. I don't believe that. I believe we'll go much lower than this, but just be aware, this is such a beautiful drawing. And for the DXY, I am still bullish on it. I have been bullish since last year. If you've been following my channel, you know I've been bullish. Let me, in matter of fact, show you, right? In this video last year, October, I was talking about the DXY getting ready for a moonshot. You guys can watch it. I've recorded everything and talk about the DXY when no one else was talking about it. Talk about the falling wedge and so on. And I kept talking about it. And you guys, people who've been long time subscriber of mine in Twitter or YouTube, whatever, or follow me in Discord, you guys can, of course, join my free Discord. You know I've been very bullish on the DXY, and now people suddenly are talking about the DXY. But I'm still very bullish on the DXY. If we look at the monthly, remember this is based on the monthly, all right? We can see we are forming a cup and handle pattern, which is a continuation pattern for an upturn. Yes, it's not perfect, but it don't have to be. If you are a trader, you will most likely say you know what, daily crypto trading, that is a wrong cup and handle, and that is fine, but it is not. All right, no textbook is perfect. They can look like this. All right, so they're roughly the same level. They don't have to align. Now, if we look at the DXY, it's making a beautiful cup and handle. So my next target will be around 129. All right, and it already hit my target of 105, 109, 113. So I do believe after that will it be 120, which will be the 2001 high. Once we break that, there will be a lot of resistance right at that area, right, guys? A lot of resistance. Be aware of that. But if we break that, the second target will be 129. Now I'm still long-term bullish on the XY. This is the monthly chart, so this will not take, days or hour or something like that. This will take months before this unfold. As most likely, in my opinion, will you see movements such like this? It will go something like this, break this, and then maybe have a retest and go something like this. All right. So my target in the end for a year ahead, maybe 1 to 2 years ahead, is around 160 to 170. And if you look at the daily DXY, we have been nailing it to the penny. We started over here. Of course, we needed a long time last year, but if you look at the cup and handle we talked about, you guys can watch my tweets and Twitter, because I talk about the cup and handle. We reached my target of $108, and then I said we will retrace. We did retrace, and we made this descending channel, which is a continuation pattern. And my other target was 112 and 109, which we of course reach again. And the tweet is right over here. All right. So 109, 112, we perfectly reached it. Again, no one talked about it, but we did. So, of course, nothing goes in a straight line. And a lot of people were talking about a parabola and the break of the dollar and so on. I'm like, have you seen the monetary policy right now with the Fed? Doesn't make sense that the dollar is getting weakening right now when they are hiking the rate and so on. But anyway, I do believe we will have some kind of retracement, which we have right now. We can either have a support right over 111 or to 109 before we see a price surge again for the DXY. Last year, I was talking about the S&P 500, the Dow, and the Bitcoin price, that everything is correlated. And I made 2 specific videos talking about that we will have a crash, we will have a 20% correction, which will be a traditional bear market. I even explained it. This video is still public. You guys can watch it, and you guys can see the date and the name of the video. I was saying that S&P 500 will fall with 20% because everything in the chart was telling me that it will fall. I was talking about the Dow Jones, which will fall 20%. Because everything in the chart was telling me, again, you guys can see from the last year, September, and the name of this video. And lo and behold, let's look at the S&P 500. What happened? 20%. And the Dow Jones, 20%. Again, no one believed this TA, and just look at the Bitcoin price, as I said when we were topped out. Let's also look at what's going on in the world. And London has fallen. Bank of England to carry out temporary push of long-dated UK bonds. That is such a weird. I can't even curse right there because they will just censor my thing and I will get like a strike or something like that. But it's just a weird way to tackle it at macroeconomic perspective, because if you do something called a QE, which is quantitative easing, which literally means they're going to print money out of the thin air to put money into the bond so the bond won't lose value. They will devalue their own currency and make this huge inflation. As soon as they did that, look at what happened to their own currency, the pound, right? British pound. It doesn't make any sense. The excuse was because pension funds and so on, they were going to get liquidated and so on, so on, so on. Again, didn't make sense in my opinion. And that is just a pure decision. The country will suffer pretty much because of the high inflation. And other news, which is quite good, I believe, or bad, you guys decide. President of the European Central Bank, I quote, "If we are not involved, we will be anchored." So that is a bullish statement. The reason this is a bullish statement is because they know, and don't be fooled, guys, the central banks know if they do not fulfill the demands that's out there with digital payment, they will get behind and other countries will take over. All right. And they actually admitted that. Let me just find it. she actually said, let me just see what she said. She said the speech, this chief of Central European Central Bank, I believe his name is Christine Lagarde. He said she does not like to see a new period of free banking due to cryptocurrency. I don't know if I want to repeat myself. Free banking. That means you are your own bank, all right? They can control you. That is literally what she's saying, that we don't want that kind of thing. That is why right now we are pushing for CBDCs, all right? They can be controlled and so on and so on. Even though they're saying it's anonymous and so on, that is not the case. They can see who you are, how much money you are, where you're using your money, which is kind of BS, in my opinion. But the matter of fact that she's saying right now that we do not want free banking. Let me repeat that. Free banking is just insane. We live in a free world with democracy and so on, most the country I'm from, and they are literally saying, no, we want to control your banking. Free banking is not what we want. That is quite insane, in my opinion. But yeah, they know that cryptocurrency is changing and very dynamically changing the currency world. That is why in this, I saw this live podcast, not podcast, this interview, they were saying, it's not a cryptocurrency, it's a crypto asset. We don't like that word. They know for a fact they're trying to change the people's mind. There's a huge demand out there and they are being used as a cryptocurrency and they are using daily to, buy items, buy things with. And they are so fearful they're getting behind. So they are rushing to build their own CBDCs right now, which is the digital currency for the euro, the yen, the USD, and so on. And one last thing, guys, Fed have now more ammunition to hike the rate. And if you've been a long time subscriber of mine, I've been very keen on this, even though the irrational people were saying, oh, all right, they're going to have a dovish talk, they're going to make a quantitative easing, print new money. I'm like, why will they do that? They're trying to remove the demand of the market. Why are you rallying? Why are you putting more money into a market where they're trying to get it out? It's just, it doesn't make any sense. And they did become more hawkish and we did see price decline. Surprise, lo and behold, as I said. Anyhow, we see now the low employment rate is even more decreasing, people are getting jobs and so on, which meaning they have more ammunition to keep hiking their rate, all right? And the PCE will come out tomorrow, which is the Fed's favorite index to measure inflation with, right? Where you see the core inflation without any food, energy, and so on, which is very volatile. And most likely, if it is low, the market will most likely just have a small rally, have a green days. If it is high, we will see a big decline of price. So keep an eye on these things, guys. Thank you for watching. If you enjoyed this concept, consider subscribe to the channel, give this a big like, and join our free Discord server. So yeah, as always, guys, see you in the Discord server.